45 listings came off the market this last month. Just canceled listing and 29 expired listings. When we're looking at the real estate market, we only had 92 sales as well in the last week. We're going to look at the real estate market in this last week and show how much some homes are selling for and what people are willing to negotiate for. If you're a home seller, be willing to negotiate on the price. As a home buyer right now, you also have to be willing to be able to negotiate, put some offers out there. Take a leap. We call them Hail Mary offers, but we're going to look at it more in this Real Estate Weekly. Hey everybody, it's Mark Coons here with Selling Kelowna Real Estate Group. If you're looking to buy, sell, invest, pick up that phone in the Kelowna real estate market, and I'd love to help you out. So give me a call, shoot me a text message, whatever you need. I got you back. I'm looking at the hot heat here. We're breaking it down, but as we're looking at it, new listings on the market, 238. Total sales, 92. Canceled listings, 145. And price decreases, 145. Big numbers I'd like to look at would be sold and canceled and expired. Heading into fall, we're probably going to start to see this number canceled and expired increase here. A lot of these canceled might be coming back on the market here, something to watch. We still have a little bit of time. A couple weekly emails ago, about 40% of our selling season left as of right now in August. There's still 40% opportunities out there. If that's good news for a home seller out there, it's time. There's some big deals to be had. And that's something we're going to break down in this deal. There are a lot of negotiating and wiggle room right now. Total sales, 92 sales in this last week. But the big news is people are willing to negotiate. Depends on the type and size of the price range. Because you higher the price range, the more wiggle room. 10% on $1 million versus 10% on $10 million. Totally different factors and number. Some recreational properties did sell this week. It was a steal of a deal. Water pipe, square feet, but was on a lease, did have its issue, 1930 built, so there's definitely pros and cons, tough to access, parking, that sort of thing. We are starting to see where they started at $249, 90 days. They sold that for $135,000. So that was a good opportunity for somebody looking for a nice waterfront recreational property in Key. When you flip the script there, anything from around $130,000 for a mobile home, the $200,000 for a mobile home in West Kelowna, and we're starting to see some apartments sell $235,000. And one off condos to $290,000 in this last week. When you flip the script and you put it at the higher price range, this one could source beautiful property. See how much they negotiated on this one. Like you saw even on that recreational property, even the Lorian one, some people, they got some room to go. It depends on the situation. Not everybody's going to have this one, but look at this one, 10 acres. Look at this beautiful setup. This is definitely a beautiful property, no doubt about it. And without achieving the highest sale this past week at $7.9 million. As we go through, we're going to take a look at all these other ones and just look at this top right here. So 3.9, let's the original list price. $4 million was the original list price, and they sold for under $3.5. Over $500,000, really a negotiating room on that one. The same thing goes for this one, $600,000 from where they originally started, $330,000 on Vineyard View in West Kelowna. Commercial, $40,000 each day. So homes still are selling fairly quickly, even in the higher price range. Yet 8 sales over $1.5 million, and some sitting in around that $1.5 million range. So this goes to show you there are some buyers for the right property out there right now, but some properties do take 160, 180 days. But this one only took 42. We'll be getting property, and it really just depends on the buyer, time, and pricing strategy. Good news for home sellers on the market. Homes are selling. 90 sales in the last week. That's actually down from what we were experiencing in July. I think August is normally the slowest time of year, especially right now. We're heading back to school fairly soon, so people are getting in the last little bit of holidays before reality hits in September. So keep that in mind as you're going through it. Now we're going to change course a little bit and look at the statistics over the last 10 years. So this in green is actually the active number of listings in the last 10 years. So you can see right now, we are actually at a peak amount of listing. We're over 1,000 where we were last year at this time. So we are adjusting right now to the real estate market. Here is about July of 2023, where we had about 2,500 active listings. Now we're over 3,500 active listings. So As a home buyer, obviously this is what you've been watching from the marketplace. And a lot of people are just sitting on, I'm calling them fence sitters right now, seeing what's going to happen in the economy, seeing what's going to happen with rates, seeing where home sellers, which ones need to get out of the property. And that's where we're starting to see some little negotiating power happening, where there's active listings, lots to choose from. And sellers are also realizing that. And so sometimes they do need to come down in price point or start at a lower price and be more aggressive. But not every property needs to negotiate that whole bunch, but it is looking at it. So total sales here, we are rather on par. We've been sitting pretty flat. We've seen a lot of these dips here. That is a lot of the seasonal trend here. So we are a little bit of these peaks. And so we are going to start heading into November. Still got a couple good months. Like I said earlier in the video, 40% of the market is still to be had in it. If you look on these same numbers, the 10-year average, 40% of sales is still yet to happen in 2025 yet. So that's what numbers are telling us. So that's good news for home sellers on the market. But as a home buyer right now, look for value add. Find that right property, ticks all the boxes, even if it's a little more expensive, be willing to negotiate on it. We call them Hail Mary offers. So if you're coming in clean, but you just want to negotiate on price point, that is something right now in the marketplace that it is probably the best time to hit, because we're going to start seeing people hold off until next spring. And you don't want to wait for that spring to mark because you don't know what's going to happen in it. So if you are actively looking, that is a suggestion for you. If you do want a little bit more perspective, if you don't want the big perspective, you just want the last couple of years where we've been at, like I said, about $1,000 additional listings on the marketplace. It's a little bit easier to read the marketplace. Our active sales are still near where they were last year, maybe a little bit below per take, but it is still holding strong, still down from what it was in 2023. But we are looking at the marketplace, less inventory then, and we have lots more inventory now. But this inventory doesn't necessarily make the full thing, because what we saw is, well, with Bill 44, a lot of governmental changes as well. So something to keep in mind. Looking at the article side of situations, we're looking to actually build Canada homes. And this is a new program set out from the federal government. We're starting with the federal government, and this introduction just happened last week. When we were looking at what is happening in the marketplace, it is really essentially government of Canada is trying to build more homes. And this whole thing is focused on large scale affordable housing. And the main focus on it is homes and units over 300 additional units. That's where we're seeing 300 plus units. That is Build Canada will do. So it's going to try and go for meaningful impact versus scattered small build. What it's going to offer is flexible financing and risk sharing. So this is what they're really trying to work and start to become co-developers or work with developers. But not only are they going to work with them, they're also going to be a financier. So they're going to finance it, they're going to work with them and offer below market loans, equity guarantees, trying to make projects more feasible than what the private market probably wouldn't touch. Sounds to me like it's something the market needs, but what this is indicating to me is because the government is sharing risk with developers, us as taxpayers are also going to have either the upside or the downside. So we hope they're making good decisions, but if private markets aren't making the decisions, then is that really a great opportunity to sink a lot more money into, especially taxpayer money? Those can kind of do. So this might use federal land, might speed up the housing delivery, unlocking underused federal land partnerships. It's going to be built around collaborations with municipalities. That being said, there's some concerns with it. There's going to be some bureaucracy obviously happening as the government of Canada. Tons of delays. Just like the GST rebate, we haven't even seen that really fully come into effect yet. And it's been 3 months. A lot of delays, a lot of bureaucratic individual things, and federal programs often review solo. So they're not going to have streamlined approval of projects. They have to work on these. They're going to have to work with the province. They're also going to have to work with the municipalities. So there's going to be lots of delays, lots of issues. And the emphasis on big builds is with impact and maybe leave out some smaller towns or smaller developers that are actively looking to build. So it might just centralize some of the builds in certain areas versus building sustainable, affordable housing in other neighborhoods that need it. Looks like a potential I mean, it could overlap as well with other BC housing programs, what they have. There might be rules that and which ones are going to supersede them, but there is no real outcomes with it. So there's billions pledged for it. And we don't know if there's going to be enough builders, materials, even trades. That's another factor on this. Do you have enough trades? Do you have enough labor to be able to put 300 plus housing on it, right? So they're looking at financing, developing all these fancy things, but are they going to be able to deliver the product? Because government of Canada is saying we're not even building about half the rate what government of Canada says we need to be building for to create some sort of affordability. So we're in a tight market, especially with the baby boomers exiting the workforce. Right now is a big time where we need to put some money into getting people into the trades and building. So some investors might hesitate to even partner, and only certain developers are going to. This is the solution. More housing is the solution. So this is something I do like. On paper, it sounds great. In reality, I'm not sure how it'll be implemented, but just something to watch. This one was just released August 19th. So this was 3 days ago. As of recording this, when they modified this document, just released last week. All right, and for the second article, what we're looking at is BCREA stats for the month of July. So there's some positives out of here. BCREA stats highlight positives out of this. The sales growth in July of 2025 for province-wide were up 2.2% this year. So that was 7,056 total sales. As you see on this chat here with the unit sales, how we've seen it pick up where we were last year. We've seen that 2.2% increase here. So there is some resilience despite broader economic headwinds. The good news for the Okanagan here is it was also up 10% in total sales. When you're looking at the Okanagan, there is some activity that is happening over 10% in sales. Kamloops was up 8.8%. Kootenay 11%. Vancouver Island 9.8%. All posted strong gains, which is really helping to offset some of the sales and what happened in the Lower Mainland. Some of the confidence is returning, but uncertainties are still there. Sales to active listings, provincial ratio is at 14.9%, which is pretty close to a balanced market according to BCREA, but it's neither an extreme buyer's nor a seller's market. We're looking at the real estate market. It's really up in the air, and we're still trying to find that happy medium. The negatives on this one, sales were still in the Lower Mainland. Sales are still, in general, below what it was in the last 10 years. So 16% lower than the 10-year average July, indicating that the inventory, even though we saw an increase in sales year over year, on the 10-year average, we're still 16% below where we normally are. Average price range is also down. So we're down about 2.1% across the board. And Lower Mainland is really dragging everything by. And this is what we're also seeing in the Okanagan, where the drop in 5.2% dollar value and 1.6% in sales. For Vancouver, Fraser Valley is down 5% and dollar volumes down 4%. So it's really weakening the overall provincial totals, which is also not having those sales happen and not having them being able to cash out in Fraser Valley or the Vancouver areas is really impacting the spillover effect into other economies and other markets like Kelowna that relies on Vancouver sometimes for the feeder market. Year-to-date decline, sales are down 9.4%. Unit sales is year-to-date, we're also down where we were last year-to-date. So this is a situation where although the numbers we're spitting them in a positive light, we're still down from where things were previously. So keep that in mind as you're looking to buy, sell, invest. But it is a